Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, June 7th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES. You'll notice right now, narrow range heading into the RTH Open. That has been par for the course here this week so far. 15 points of range right now, and you're seeing just 29% of average range, 29%. Right here I have it on a 3-day narrow range, and you're seeing 37% on a 3-day range basis. Barely registers down here, just 37 points of range on a 3-day range basis. It's been averaging about 97 points per day on a 3-day range basis. So when we do get a breakout move here, at some point we likely get a move that is somewhere between 100 and 120 points on a 3-day range basis. If, given the strength we've seen right now, if we are going to push down first and find a strong rejection, we can then look higher about 100, 120 points, and that could be a good upside target. So this market remains very bullish. We still have a key range target this thing is working toward as well. You have this key range here to here. The 100% target is right there. That's 43.43 as the next upside target. And again, with this narrow range after the breakout here, any failed new low over the next day or two could open up a move in the 43.43 and beyond, given the fact that we could see a 100 to 120 point move up ahead. So keeping an eye on that. Again, one thing we haven't seen much of is pullbacks here over the recent several days here. Very, very strong since this move here. But again, if we do get some sort of failed breakdown, it could catapult price much, much higher ahead. If we take a look here at the NQ, obviously this one has led the market higher. This thing's sitting on highs. Very narrow range that has developed over the last 3 days and now 4 days. So we can actually bring this up to a 4-day range now. And you'll see right here 39% of average, 226 points. Average is about 560 on a 4-day range basis. We could be looking at 560 up to 700 points of range up ahead if we can get a good breakout from this range. Again, very similar to what we just mentioned here in the ES, given the fact that we have the super narrow range that is formed in a very bullish trend. Any pullback, again, very similar to this one right here. That's a narrow 3-day range. You get the failed breakdown and you get the massive swing move up over the next 4 days. That's something we're looking for here. Maybe not the magnitude of strength here, but something along those lines. If we get that drop into 14.4, maybe 14.3, that could then catapult us higher, 700 points. If we get back as low as 14.3 plus 700, that gets you right to 15,000. 15,000 could be the next stop ahead over the next 4 days if we get some sort of breakout up ahead. Until then, we could be mostly range bound in the ES and the NQ, and it could be painfully range bound. Right now, 33% of average, tiny doji-like day here for the NQ, and when that's the case, you definitely want to avoid the chop at the center of the range and look to only fade new highs, new lows back toward the center of the range. All right, taking a look here at crude oil. Crude oil up about 0.9%. This one has gotten a little messy. You can see here the range that's still in play back here. We're at the center of the range. We just made some moves at the edge this way and just made a move back, but we're now at the center. And once you're at the center, it could be more chop, kind of similar to what we've talked about with some of these other markets where you're just biding your time here, chopping around. The big move's going to happen at the extreme. So if price can come up here, maybe it's a fade back down. Down here, it's a fade back up. But at the moment, very lacking in direction, mostly choppy range price action. And that follows a string of very good moves we've seen for some time. So, to get a little bit of buildup of energy here is good. We'll see if this thing can launch us to the next target above. Again, given the fact that we're down here at the lower part of this range, building this range here, suggests that at some point we'll transition and trade back up through the top of the range. 80.5 and 83.5 are the next upside targets ahead, but we could see more chop until then. Taking a look here at gold futures. Gold down about 1/3 of 1%. This one also has been a little different here lately, has been trending mostly down. Lower value relationship here being rejected, down. Not the biggest down move at the moment. This one also kind of stuck in a range here, but after selling pressure. Still holding the 1960 level, 1940 level. Those are all edges right here that must hold, because if they fail here, it opens up the 1830 down below, 1800 as well. So it's a big time zone up here. Again, kind of like crude oil, we may be stuck in this range for a little while here until we see some movement. If price can push through 2000, it opens up the move back to 2035 and 2080. A failure here and you're back down to 1940 with a downward bias and a shot to maybe see expansion to the downside. You have this key range, 1886, as the key range target. That's this range here. We're sitting there just below the key range low here. So at some point, you're either going to make that move across the range or you're going to make that move to the expansion target. So continuing to watch this range develop. Lastly, the YM. The YM here with a massive squeeze day on Friday. Today, a very narrow range here, 108 points. That's 25% of average range today, and a narrow 2-day range at the moment. Super narrow, maybe 3 if you wanted to go that route. This market right now sitting right at the key range midpoint. This is the key range midpoint from the impulse move down. It gave up this edge over here and snapped back to the middle real fast. And we're still trading in this lower half of the distribution here. Again, if this market can find a way to push beyond the midpoint here, it opens up the highs. That'd be 34,634 as the target highs. We haven't really traded in that zone since its creation. So for the most part, bears have done a really good job of keeping prices offered at 33.9. We've seen it here, 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 and now here. That's also where the FOMC key levels are. We have the one from December of this year, and we also have the one from May 3rd right here, and you can see how it's become resistance already. So again, that's the key level to push through 33.9 if this thing's going to open up some upside. Otherwise, we may be stuck within this range yet again. So continuing to watch the development here in the YM. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.